Okay, so we're back. Amy and I were just talking about, we want to go a little bit deeper when it comes to interest rates. So I mentioned that after the last inflation reading, which was, just kind of early April, where it surprised to the upside in terms of just being that the core inflation did not go up as much as what was projected. So as a result, the past 2 weeks, it's been pretty moderate in the bond market. And what's interesting about that is the inflation reading, it's coming out every single month, right? So we started the year, we went from essentially like 2% to 6.2, right? Just in 1 month, it just went straight up. And then it went to 7, then 7.5, then 7.9, and then 8.5. 8.5 was the last reading. So right now, since bonds have kind of stabilized a little bit, interest rates have stabilized a little bit, this is a good time to consider locking your rate, right? Now, if you're under a new construction, right? So you locked in, you're building your beautiful home, and your home isn't going to be completed until January, and all you're doing is stressing because, oh my gosh, my payments are going up, interest rates are going up. What can I do? Like, I don't know. How do I protect myself? Well, we've got an answer, right? So Amy and I, we've been talking about this, and with our company, Guaranteed Rate, we actually have a lock and build service. So just for 180 days, which would get you to, I don't know, I think that would be October-ish, you could actually lock in your rate at the present rate and lock that in for 180 days. There's a cost, right? It's not free, right? So it's not free, but we'll do that cost benefit analysis to see if it makes sense for you to commit the capital to actually locking in that rate. And if rates go down, you have a protection on the downside too, because we have a one-time float down. It's called a rate renegotiation, and it's a smaller fee. So there's a small little fee where you would pay to actually meet that market rate. So you're protected, right? Regardless of what happens with interest rates. Because, I mentioned that at 8.5, that was the last reading. What if it goes to 11, right? On inflation, that could push mortgage rates even higher. So Amy, what are your thoughts about, this particular service on new construction?
Well, I mean, because new construction now is taking almost, it can take anywhere from, contract to close on a new build. It could take almost a year. There are even builders that are saying 15 months on that. And so it really scares people because they know that they can't lock in. And they're even nervous about the price of the home even going up while they're building. And actually that home is actually creating more value. You're paying for it, but you're getting more value in the home by the time it closes. So if you buy a home at 400, it might be 450 by the time you close. But going back to locking in that rate, not all people can lock in those rates. And so it's important to have a lender that's like, hey, we're so far out, the rate might go up, so let's lock you in now. It's smaller price to pay for an upfront rate lock than it is to get down the road and be 3% higher than what you originally started out with. So I think having that rate lock in there is really good, and paying that extra fee for that. It's important because we don't want the price of your home to go up and your interest rate. So we want to, find a builder that is not going to increase the price. And then also, even though they're going to make you run parallel loans with them, they may not have that rate lock. They may not have that opportunity like Guarantee Rate does. So I believe that this is something that's really crucial right now in this time of, going into this summer, this time of these new builds taking so long. And, for real estate agents, we want that to go faster. We really do. We'll push every way we can to get it done quicker, but still, your biggest protection in terms of loan is having a rate lock opportunity.
Yeah, exactly. And so the steps that we would take, right? So step one is, if you're under contract, you would just apply with me, right? So you would just go to rate.com/Ron Bruno, click the apply now button, answer the questions. I now have your application. I am then going to pre-approve you from my side. And once you're pre-approved, then I'm going to send your file directly to underwriting, because I want to address anything we need to address right then and there, not wait at all, right? I want to make sure that we're good to go, right? And an underwriter has reviewed income, assets, and credit. Then we'll look at current pricing, and if it makes sense, And this is most important, right, Amy, is you want to know and you want to be you want to be as confident as possible of your build schedule.
Yes.
So that's number one.
I'm going to give you a bigger number one.
Yeah.
Once you get under contract, do not please. You get to really the golden rule. The golden rule is to not purchase anything while you're under contract on that home. Not the day before, not 5 days before. If they come to you and they say, we've got your final loan approval, you're good to go, that does not mean that you can go buy a refrigerator, buy some new furniture for this beautiful home, go buy a car, a ring for your spouse, finance a big trip. Zero, please. And I've had more people than one go and try to buy a car like 5 days before closing because he got the final. Just please trust all of us and be forthright. Hold on until you close. When you get those keys, you can go to any department store and buy anything you want. And then the other thing that I might want to add to this is that in the beginning, when you get started and you know that you want to apply for a loan for a home, is to, I would think, to go in and to check your own credit, do your own background check on yourself, so that way you can go to myfico.com. You might get it free for 30 days. It is solid. It gives you all three reports, and it might tell you if you have any school loans that might be past due, or maybe you owned a home before and you did some work for new floors and you didn't make that final payment, and the contractor put a lien on your home. So it's really important to do these things step by step, so that way going in. I've had a buyer that got all the way down to the final days of his closing, actually the last month, on a brand new build he'd been waiting for 8 months, and they found that he had a delinquent school loan. And at that point, because it's a government loan, they were not going to move forward with his loan, and he ended up signing a new lease on his home after being excited about that build. So it's important to be cognizant of your own things that you have going on just as you're applying for the loan, so that way everybody knows up front what they're working with.
Yeah,
that's my biggest thing.
Yeah, exactly. So, that brings up a really good point of all the things you want to protect yourself. I remember when my wife and I, when we were building our home, Karen called me the mortgage police. Right? Because I told her, I'm like, we can't spend anything, can't take out new credit, no cars, no TV, none of that stuff. I said, you can load it in the cart. So if you want to add it in the cart, that's cool, create a wish list, but we're not taking out any credit. We're not going to buy a thing. And we took our own advice, right? So I'm a lender, so that was really key. But, getting back to the build schedule, what's really important about that is when the builder says, oh, it's going to take a year, don't do the extended rate lock for a year, because it's probably going to take longer than that. When they say, oh, your home will be, completed and it's going to take 3 months, get a 3-month buffer to that, right? But you also want to ask that builder and get real proof of the actual close time of how they are closing these homes and finishing those homes. Because the last thing I would want someone to do is commit capital, significant capital, to building a rate lock, and then we lose it, right? So you just want to make sure that we do that process. And that's also why I want to make sure that we go through underwriting and we address all the stuff we need to address before we commit that capital. But once we've made that decision, we've talked with the agent, we've talked with the builder, and we have a good, solid game plan, then bam, now you don't have to watch CNBC anymore.
Bam.
So that's how it works. So stay tuned.